ATNF making waves through the socials with its upside thrust. Let's go ahead and find out exactly what can happen with the price action for the coming sessions. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an ATNF technicals, raw price action, and statistical thread of analysis on this fine Thursday night. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's dive right into the charts. Okay, so by popular demand, my goodness, ATNF is quite the talk right now, and I was compelled to make a thread of analysis for it, a full thread on it. So enjoy, you guys. So yeah, let's go ahead and take a look at the ATNF 5-day chart, and in this case, we can see that we're within a very similar formation of what's happening within the macro space, the medium term, and the immediate short term. My goodness, this formation is just insane. So this is a broadening descending wedge, and we have already fulfilled 3 tests of that golden rule of 3, and also fulfilled the capitulation after that test number 3, of course. And we can actually see, well, using a little bit of candle analysis, since we are in the 5-day chart, which is actually a very good time frame and a notable time frame to use candle analysis. So in this case, we can see that we printed a hammer candle right at the bottom of this trend. And usually when we print this hammer, the upside is usually imminent. Okay, now the validation candle, which we're going to be able to see when this candle closes upon the market open. I'm not sure if it's closed just yet, but this candle would essentially be the confirmation candle for the hammer and a validator for a continuation to the upside. Okay, a very important thing to notice here is that the upside thrust that we're getting right now would essentially be in an attempt to make a true breakout upon test number 4, which is usually how these plays work out. I'm talking about per the playbook rules of a broadening descending wedge. So we can see that there's still a way to go. And also, please notice that every single candle here is a 5-day read. Okay, these are all 5-day iterations. So it takes 5 days to complete this candle, and I'm talking 5 trading days. All right, so now let's go ahead and move on to the charts. Okay, because we do have a suggestion to the upside even still for the 5-day RSI, okay, but we still have a little bit of resistance right with that 14-day simple moving average on that pink line, okay. So the RSI signal may face a rejection here, but we don't know just yet, and I will tell you why when we get to the RSI analysis towards the end of the video. Okay, so now let's move on to the next chart and see what we have. Okay, so we're gonna go ahead and touch on some raw price action here. Okay, so this is considered a pennant. Okay, pennants usually happen after an uptrend. Okay, so in this case, we are making a series of higher highs and higher lows. Very cool. But this was an impulsive buy. Okay, so this is actually something that we can ignore for now, and we can connect the dots to seeing what the pennant is actually doing. Okay, so if I'm looking at raw candle analysis here, which is this is very difficult here because we're looking at the 4-hour chart, and as you get into smaller term time frames, candle analysis becomes a little hazy, okay? But a good thing to notice is that the prior iterations of candles, okay? So you gotta know your candle structures, your candle types, in order to see if the asset is even respecting the candle analysis within the time frame that you're looking at. Okay, so in this case, we can actually see that the 4-hour candle has printed an enormous bullish. This is a bearish engulfing. Okay, so that happens when the red body ahead of the green body is entirely engulfing the green body. Okay, so in this case, you see that the bearish engulfing actually did work out. And another little clue here is that we printed at the bottom of this downtrend an inverted hammer, which usually presents an uptrend. Okay, so those are all little clues that maybe candle analysis is working in a sense here. We do have at the bottom of the downtrend here another inverted hammer, and we continue to the upside. So a lot of those things they serve as like little hints. So it's very discretionary to do it like this, but just know that those are little tricks that you can do. Okay, so usually pennants do have a breakout, and the breakout usually happens happens to the upside. Okay, so now there is a way to imply or to bring up a price objective, and we actually do that by taking a trend line from the highest point of that triangle, and we align it to the lowest point of the triangle, which arguably could be right about here, and then we apply this to the supposed breakout point, which is usually about 75% to the apex of the triangle. Okay, so usually around here. So let's just go ahead and see what target that gives us. Okay, so let's see. So that's telling us about $9.49, which has a lot to do with this entire area right here, support and resistance. We have used it here as resistance as well. So the target does have some pretty desired price action, historically speaking, of course. So and also please do remember that we're looking at it in the 4-hour time frame. Usually these formations tend to pan out better when we're in higher term time frames, meaning the 8-hour minimum and 12-hour daily, all of those would be better to see these formations pan out, but triangles in general have a little bit of a higher hit rate than other formations in general anyway. So yeah, this is giving us a potential bullish outcome here. Okay, so we can actually take let's just go ahead and get the rate. We can take a fib ratio, right, from the low of the day, from the swing low of the day to the swing high of the day, and let's see what that can imply. Okay, so let's go ahead and just take it like this, from that highest candle and to the lowest point of the day, and actually you can see that we're leading right into the 1.618 and $9.27. So now we have a range of resistance. Okay, so we can take into consideration the 1.618 at 927 and the 952 price objective. All right, so that is what it's looking like thus far. We still need to validate the upside. Let's go ahead and continue on to the next chart. So this is a very important chart that I need to talk to you guys about. Okay, so I ran a back test of volatility versus momentum. Okay, so this is volatility you're looking at, represented by this indicator BBWP. This is momentum, or stochastics momentum oscillator, that you're looking at, which is proprietary to TradingView software, which, by the way, I am accepted into their affiliate program. So if you do start an account with TradingView, that would certainly help my future of trading. You guys, thank you for considering that. The links will be in the description below. Okay, so I did run a back test by hand, and that is actually taking into consideration any time that volatility has expanded into full expansion, which is typically within the 90 percentile, and we've started a contraction phase towards the downside alongside momentum suggesting an upside. So I've taken note of that iteration's duration, the iteration's upside thrust, and the times that the times that volatility versus momentum have guessed the upside correctly versus incorrectly. So we do have a statistical mean here, and that gives us, out of a total 21 iterations throughout the entire trading history of the ATNF asset on the daily chart, we are looking at 16 out of those 21 correctly guessed to the upside, giving us an averaged upside accuracy of 76.19% with an averaged upside thrust of 58.82% over the span of just under 15 and a half days. This is proof of work here. So this is particularly important for me to express to you, and I hope that GTII people are viewing this, and I do hope that Mullen people are viewing this. In fact, I hope everyone is viewing this so that you can see just how statistics play out and how they can surpass or undermine your statistical variable. In this case, the firing of the signal actually happened right here at the opening of this doji candle on December 27th. The opening of that candle is, you can see the metrics right up here, they're very small. So you're looking at the opening of the candle at $1.92. If we imply now a measurement tool to the top side of where we currently are, what we saw today, the high today, which was about $7.20, that is a 272.56% move to the upside. So 272%, okay? So the statistics came back with 58.82. So we clearly overshot that. All right, so this. I hope that you guys are watching this. I hope that you're still listening at this point of the video, because this is a prime example of what I say all the time. These are just statistical metrics. We are using them to evaluate the possibilities of the upside, okay, or the probabilities, better said. Okay, so in this case, I am still bullish on ATNF for the medium term. For the fact that stochastic momentum is still suggesting an upside, and we're still at critical volatility. Okay, so I just so you know, I have backtested the stochastic momentum oscillator throughout several tickers. Okay, and all of these tickers have actually given me. If you're familiar with statistics, I've actually gotten the lower end of the first standard deviation to be at about 75%, and the higher end to be at about 91% in guessing the assets. Direction, okay, accurately. So it's not perfect, but it's very good to consider and to factor into our probabilities. Okay, so now let's go ahead and move on to the last part of the chart, as I do have a live to get to in about 30 minutes with you guys. So now we are looking at the divergence chart here. So there is something happening within the 12-hour time frame here. So every single green bar that you've seen, that you're watching here, that you're seeing in front of you, is actually drawn by hand by me, and I'm actually looking at several drives of hidden bearish divergence. Okay, so in this case, we do have also some drives that are phantom hidden bearish divergence as well, alongside primary divergences. So all of this is currently in play, and you can see that it's starting to stack up. Okay, so there could potentially be a pullback in the immediate short term. So now let's go ahead and open up the a multi-pane so that we can see just if we are looking at a pullback soon, because if it is, I wouldn't doubt that it would happen literally tomorrow or the next day. And why am I saying that? I'm saying that because it's already ran 250%. So at some point, the asset's gonna want to take a breather. You know what I mean? That's a lot of the times we have to consider the possibilities of that. So for the RSI, we're going to be looking at the 30-minute, the bi-hourly. Let's take a look at the 6-hour, and since we already saw the 12-hour, we'll look at the daily, and then this is actually the way we're going to gauge that true bias for direction, starting immediately. Okay, so now let me go ahead and just show you guys this here. This is the diagram for the RSI zones. Okay, so as they're located right over here, I just want you to hone in on them so that you can understand what I'm talking about as we move along. Okay, so we can see that the 30-minute immediate short-term time frame is very much unbiased. There is a suggestion coming from the 14-day simple moving average, a little bearish, but this is likely to live out pretty fast. Okay, even the 15-minute is still very much sideways. So okay, now let's look at the bi-hourly. So the bi-hourly is actually suggesting a slight downside. Okay, but the pivot is not it's not strong enough to consider. So, and now another thing is that we are sitting at the very deep areas of the bull weakness percentile, which usually means that we can face kind of a pull right back into the prior zone, which would be the bull strength. Okay, we are getting a hint from the moving average and suggesting some downside. So if we do make that upside, there is the potential that we can use the 14-day moving average as a form of resistance and a continuation guide to the downside. So please keep that in mind. Okay, so there is some signs of downside already, which is what I was telling you. Okay, and based on it's also in accordance to this here. I know that this is the 4-hour, and yes, we are respecting some candle analysis, which is, by the way, giving us a hint to the downside with this massive shooting star. Okay, so this is usually a bearish signal when we're at the top, when we're at the upper side of a trend. Okay, so when it prints on the upper side, we can see a pullback, and that pullback can actually we do have support from the pennant right down here at about $4.38. But let's continue on with the analysis and see. Okay, so now the 6-hour time frame is actually suggesting a little bit of downside, but please notice that the moving average is right below us, so this is likely to come up soon, and this can likely use it as a form of support before a continuation onto the upside. Another thing is that the moment that we do step into this area, the moving average would then have moved into that deep area of the bull weakness percentile, which also is that gravitational zone where we can actually be gravitationally pulled right back into the prior zone, which is the bull strength, and using the support from the moving average. So this is leading me to believe that there is still upside left. Okay, so now let's look at the daily, since we already saw the divergence chart on the 12-hour, and you can see that we are suggesting an upside. Okay, so here's an important thing. Always mind your position, okay, of your RSI signal being the purple line. In this case, we came all the way up to the middle, right? I'm talking about the middle right here. So we surpassed the middle, and we're still within that gravitational pull. We're at the shallow areas of the bull weakness, and then we were pulled right back into the other shallow area of the prior zone, which is the bear weakness, and now we're being pulled right again. So this is, unless we break either this side or this side, we're gonna stay stuck trading sideways. Okay, so now let's go to the upper time frames to see if we can get a better hint. Okay, there we go. This is now what we want to see. Bi-daily is now crossing into the bear weakness from bear strength. You can see that the pivot on the moving average is starting to favor the upside a little bit. Okay, and this is still suggesting upside. 3-day is suggesting upside as well, a little more aggressively, and you can see that the pivot of the 14-day moving average is now starting to favor the upside as well. The position of the RSI signal is right at the shallow areas of the bear strength percentile, meaning that we can likely be pulled right into the following zone, which is the bear weakness. Okay, so 5-day is now suggesting upside as well. A little bit of resistance here, which means that the upside may be limited. Okay, so but I'm talking about limited as in next week or the following week. Okay, so as this is a large move that we're looking at here. So if we're going to continue that upside, then we can potentially see by the end of next week or mid next week, if we're playing by the playbook rules without any FOMO and without any psychological events or catalysts that can lead to an immediate upside, I can see the upside happening for ATNF by the end of next week, potentially. Okay, so it's just based on the suggestions of the moving averages and also momentum. Okay, so as far as upside targets, I can already see an immediate area of resistance between 427 and 496 in the short to medium term time frame. Okay, so the pullback, like I said earlier, very likely to test the bottom side of this pennant here. But we probably have some moving averages right. Actually, let's load them. We probably have some moving averages right below here, so that can also serve as a form of support. There's the SMA 10. We're looking at it at about 462. Let's see if we have some EMAs. Yeah, the EMA 7 is right at that 452 area too, as well. Sorry, or 458. Right around there, 462 to 458. And let's take a look here. So ARMA is still bullish. That's good. I'm sorry, DBSI, the ARC-Series indicator from Crypstex, that's still bullish, 61%. Bull lead over the bears at about 39%. Okay, and now the ARC armor from Crypstex is also giving us a long signal. It's still honoring that long signal, and we have massive amounts of green exponential moving averages now making that bullish wave. Okay, so these indicators are available to you. Just send me a DM and we'll go ahead and go over those subscription packages. All right, you guys, so that's going to do it for the video. If you have any questions or concerns, please don't hesitate to reach out to me on Discord or Twitter. Those links will be included in the description below. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets, okay? I need you to do your own DD and everything will be just fine, okay, you guys? So, yeah, so that's just about it. Well, thank you so much for watching. I wish you well, a very good night, and I will catch you at the bell mañana. Adios.